Double distribution yesterday, and I want to get into our content here, but the way I played double distributions the next day, so if price starts getting well into, especially above 1909, this is where I would look to get long, and I would look for, this is my first target, which we hit, and this is my second target, and I would start looking for activity that would show sellers. Doesn't mean there would be, but I'd start looking for activity that shows buyers starting to weaken and sellers starting to pick up in this area. And so I would start looking even potentially, I don't want to be short necessarily. I want to hang on to my trade until today's activity tells me I need to let it go. I need to take profit. And then and only then, what I would look for is either today's information, today's profile and print, to tell me that this is the distribution that today's market is most interested in, or I would look for price to break up through 1921 and look for a long on the other side of 1921 as long as I don't have evidence of a stop run. And then I would look to play that long up through this distribution and up through to yesterday's high. That's how I would play, per se, a double distribution day. I think I have a setting on my volume profile. I just got to quickly check. Okay. Okay. All right, we're getting a little bit of a pullback here. VPOC is now sitting at 1225. Again, my first target is right in front of this VPOC from yesterday. So just real quickly, and then I'm going to get back to the content. Look at yesterday's VPOC at 15. And right now, what is the market telling you about this being fair price? Now, this may turn out to be fair price, and we very well may see price come up all the way through this low volume area and test higher. But right now, what buyers are saying is we're either taking profit or we don't have a lot of interest on the other side of this volume point of control. And it's one of the reasons I look to scale a couple of ticks in front of it. Because a lot of times, and I talked about this, and I don't have a percentage of time. It really depends upon what the market's trying to do. The reason I scale out in front of the previous day's VPOC is because in the shorter term, we've had a trend to the downside, and tagging yesterday's VPOC is an area that would make sense to me for the market to start turning around and moving lower. It tested it. It completed the test. Right now, relative to that test, it's saying not the same sentiment as yesterday. Does that mean that it won't? No, it doesn't mean that. But what it's saying is right now I don't have the same sentiment. All right, so we're going to come back to that. I will tell you that this still looks, you don't see a really good taper here, but we do have a low volume area now at 1475, a lower volume area here at 1475. And the print is now showing, the print is not only just showing weakness at the offer, but look at the activity back at the bid. So I couldn't engage long again until I started seeing buyers holding the bid and actually starting to come back with strength. So, but that trade at 1075.11 this morning worked for VPOC for what, 4 points, which is a good start to the day. What's the logic for thinking long out of the 19 volume area? And again, that's yesterday's distribution, and I'll get back into that. There are going to be a lot of questions around trading. How to get yesterday's volume profile? Yeah, so I'm going to give to DB, and he'll put them out there today, my templates. So I'll have 3 primary templates that I'll provide for you. And to get yesterday's profile, all I did was simply start this profile at the beginning of the day, and I ended it at the end of the day. So I pulled it to the end of the day, and it gave me yesterday's profile. And just to be clear about something, I'm really not interested in going long until price would get above 21. I would need to see the auction starting to support acceptance higher than this. I would look for around a 20.50 for long. And then I would look for price to get back up into this distribution. So if let's just say price gets up here again, if sellers aren't willing to take this back down, and let's say they try, buyers hold them, and it starts moving back around above this 21 level, then again, it's all about probabilities. The probability here is that price is going to start moving up through yesterday's distribution, and we'll see another distribution today that is above 21, 22, and give reason for price to go higher. However, still have this area right here. The auction doesn't look finished to the upside, but the print is saying that buyers have checked out, and I couldn't go long again until I saw them re-engage and effectively start to move price again. All right, so I want to make sure I get through the content. Yesterday I was an hour into it before I realized I was an hour into it. So I'll try to get back to some of those questions, and we're going to have a lot more time over the next 2 days. And last question I'll answer is, wouldn't the sellers of yesterday defend the single they made at 1975? That could be. However, this will be my last thing. Remember my context this morning. And this is why I go through pre-market sessions. Remember my context this morning that some significant, likely other time frame participant said, we're not moving lower. I saw it in the volume. It was very early, a lot of volume for that time. This was clearly another time frame participant that said, I have interest. This is, I believe value is higher. If price is gonna go lower, you're gonna have to come through me. And then it spent the rest of the pre-market with this test lower right down to this low volume area here. And then we saw buying again, and then we had the open drive, which was buying right off the open. Everything right now from this point right here, that's why I pointed it out this morning. I said it doesn't mean that price absolutely will come down, back down here. In fact, this is some pretty strong buying. But everything about this pre-market, number one, suggested volatility because of where I had VPOC, and now from the open on is suggesting that sellers are, let's put it this way, sellers this morning are contributing to the accounts of the buyers. How's that? So won't sellers defend this area at 19 or right here? That's possible, and it's something 17, real quickly, 17 is also a long-term low volume area right here. So it's very possible that that sellers will defend it, that they'll step in, however you want to say it. And we're seeing a little bit of that right now. But for me now, because of the way this worked, I would need to see price and we came back down here to 1125, I would need to see price really break through 1075 and back down through the open for me to start thinking short. Everything of this market from the open on, the context is that the pretty much the buyers are eating the seller's lunch. So I need that context to change, and once it changes for me, then I would start thinking about a potential short. And might I miss a trade up here around 17, 18, 19, right where this low volume area starts? Absolutely, I might miss that. But for me, remember I said that I give the most context, the most weight to the current day's activity. For me to trade against today's buyers right now, even though I've got a low volume area here, even if price comes up, we get a nice finish, I could do it. Get a nice finish, we get weakness at the offer, strength at the bid. I could take a trade, but I'll tell you what, my stop's going to be really, really tight. So it would be against everything that I'm reading in the market right now. So sellers definitely could come in and defend this area right in front of this this low volume area. In fact, it'd be something that I would watch for. But what I would need to see repeatedly is I would need to see a push down by sellers in the print, another effort by buyers. I would need to see the buyers held and then push down back below this 1075, which buyers have, for lack of a better term, defended or stepped in there twice now. Yep. And we did see a long bias print. Actually, not yet. In fact, this is where for me I would start sitting on my hands. I'm looking at this print right here. Looking at this print, I'm looking at the move higher here, and even though price is going up and I can see weakness at the offer on this side, the actual numbers right here just don't excite me about a long. Now it worked, but I didn't have anything in the print here that suggested that this was going to go higher. We had neutral cluster here, activity back at the bid. Price still went higher, but it went higher because sellers really didn't engage. So I'm looking back up here for sellers to potentially engage and buyers to prove to me that they really have the continued momentum. So I'm not real excited about yet about still going long, even though that's a sentiment for the morning. I didn't like the way that this auctioned. And again, what I've trained myself to do is look at things like this and respond to it. Does it mean I miss trades? Yep, certainly does. But I can tell you more times than not, when I see something that, and I objectively respond to it to say, man, this really just doesn't look that strong from a buying standpoint, it could mean that I missed the trade. But more times than not, I find that I've protected my downside. And I also know this is not the last trade of the day. And this level worked. I didn't really have a signal to get in. I would be looking for something like this. And even if I use that to get in, with this additional strength at the bid, I might have taken my stop at break even or a smaller stop. Again, I'm just using the print to manage my trade and trade objectively. I have never gone home red by managing my risk effectively. All right, let's finish up a review of day 2. So we're going to do this again tomorrow and Friday. If we get to a presentation at all tomorrow and Friday, except for a little bit of context, I would be surprised. We're going to spend most of the time in the charts. So real quickly here, to continue this, low volume areas, and I'll get back to questions in a bit. I want to get through the content. Low volume areas are prices where buyers and sellers have not shown to want to initiate trade. You saw it today. We had the profile show us a low volume area. As price came through it, it came back, retested it, and sellers failed, buyers picked up, and it was a good opportunity for a long. Those are trades on Friday. When I'm trading, you're going to see me take. Consider to be either an unfair high or low, depending on market sentiment. Real quickly, the other thing I want to tell you is my trading method, especially once I'm in a trade and how I manage a trade, has been I've developed over many years and thousands and thousands and thousands and thousands of hours. But it's right for me. It's right for me. And what you see and what you do needs to be right for you. So I want a caveat over the next 2 days as you see me do more trades. And I'm going to tell you why I'm getting in. I'm going to tell you why I'm getting out or managing a trade, scaling out of a trade. I'm going to specifically tell you why. But I'm going to put that all in the context of an objective, a financial objective for the day. And that will make more sense to you. And my goal is to show you that, again, when you have that financial objective to the upside, profit, and what your risk tolerance is, it will help you. As long as you keep it out in front of you, it'll help you stay objective. All right, low volume areas considered to be either unfair highs or lows, depending upon market sentiment. So this example from this morning, we had an open drive, significant amount of success by buyers to move price higher. And that made, once we had that low volume area developed at 75, it made that an unfair low. When price came back down to it and we got the print the way we wanted it, it was a trade long. So they're either an unfair high or low. Price is going to either slingshot through it or act as a brick wall. This morning as price came back to that low volume area, it acted as a brick wall. And it can provide excellent risk reward trade opportunities, as you saw this morning. I had a potential, my stop would have been about 3 ticks, and that trade was, if I would have closed the trade at yesterday's VPOC, that would have been a 4-point trade. So the risk to reward against low volume areas is pretty phenomenal. I'll get to questions here in a few minutes once I get through this review. Volume point of control. It's the highest volume price point in any specific volume profile. So today's volume point of control is likely going to be different than yesterday's volume point of control. Today's volume point of control right now is significantly different than the overnight volume point of control. And real quickly, we talked about this before as well, but I want to show you the example. Remember when I talked about where VPOC is relative to the value area? And I said if VPOC is low against the value area, the likelihood is that price is going to go back up. If VPOC or could have acceptance lower, this would give more credence, weight to a breakout below this level, having the VPOC low. If VPOC is high in the value area, I'm looking for evidence in the print that would suggest that price is coming back down, especially if there was a good finish to one side. If the print or if the VPOC is the middle, we have a nice distribution around it, then I'm looking for an open auction, or I'm looking for price to rotate around that VPOC until one side or the other gets aggressive and starts probing higher or lower prices. So this was another example. This also led to some evidence that buyers were holding, and price may go up. So I just wanted to point that out. So where VPOC is in the value area will give you some level of understanding based on the print. Is the market going to continue, or is this a potential area for price to turn around? Again, VPOC will often act as a price magnet after price gets rejected at higher and lower test areas. The finish. It's the tapered edges of the volume profile that reflects the end of a directional move. Very easy to see at the end of the day. And in a developing volume profile, can look finished to one side in a specific direction several times throughout the day. This is particularly true with a trend day. where you're getting consistent, constant new distributions higher or lower, and as it comes up or comes down, it looks finished to one side, and all it's doing is rotating back up through that last distribution to the next higher, low volume area where you're looking to take a continuation trade on that trend. So they can look finished, and then once trade starts moving back down in a finished area, it opens up that auction, and we'll see price move or continue in that direction. There's a high probability that unfinished auctions will be revisited, and the auction will continue in that direction. So this morning, when buyers started to relent and sellers started, I don't want to say sellers started stepping in, what we saw was activity at the bid. And when you see activity at the bid, especially after an open drive, you can't just say, well, sellers are stepping in here. Sellers are stepping in, because all of that buying is going to turn into selling at some point as they take profit. So you would expect to see a good amount of selling at some point after a fair amount of buying. The thing you want to look for is, as price is coming down, if it's showing a significant amount of what would be considered selling in the print, is the buying weak? Is the buying just incredibly weak until it gets to a logical point where the activity at the offer starts picking up again? If that's the case, then what you're most likely looking at is a liquidation of inventory and not buyers stepping back into the market, and you can begin to expect to see price moving higher.